Good afternoon, friends. I'm starting presentation on place of supply of goods and services. So let's take this topic and discuss in detail each of the components for place of supply for goods and services. We are going to discuss multiple points in this particular topic. Why there is a need for place of supply for goods and services? What is the provision? How to determine place of supply for goods domestic transaction within India transaction, place of supply for goods in export and import. Then we are going to discuss place of supply for services within India. Similarly, we will discuss place of supply for export and import of services. And we are going to discuss with multiple examples. Even we are going to discuss certain place of supply principle and compare whether place of supply is going to determining factor for taking registration in GST or place of supply provision versus input tax credit provision. So let's start with why there is a need for place of supply for goods and services. As we all know that when we discuss place of supply within India, there are two transactions. One is called intrastate, another one is called interstate. Intrastate means, and again two determining factor, location of supplier and place of supply within one state. Transaction is termed as intrastate. And what is taxable, what is chargeable, CGST and respective state or union territory GST. So CGST and SGST or UTGST in case of union territories. In case of interstate means if location of supply, let's say in Delhi, and place of supply, let's say Maharashtra, in two different states, transaction going to be termed as interstate and IGST leviable. When we export or import, these transactions are called interstate. If GST leviable, then IGST to be levied. For export, as we all know, it is zero rated, though it is going to be interstate, but no GST leviable in terms of section 16 of IGST Act 2017. So section 16 very clearly says that two transactions, export of goods and services and supplies to SEZ unit or developer, are zero rated, meaning thereby transaction going to be interstate but no GST leviable either on payment of IGST route, of which rebate can be claimed by the exporter, or without payment of GST, but in that case refund of ITC, input tax credit, would be available in the hands of exporter or the person who is supplying to SEZ unit or developer. In case of import, it's an interstate, IGST leviable along with other applicable custom duties. So this is what the broad meaning of intrastate and interstate. When we look at detailed provision in IGST Act 2017, Section 7 talks about certain transactions which are called interstate supply, and Section 8 talks about intrastate supply. Let's look at all transactions one by one. For broad clarity, what all transaction going to be called interstate supply, in terms of Section 7 of IGST Act 2017. The first transaction. It says, if location of supplier and place of supply is in two different states or two different union territories, or one in a particular state, another place of supply in union territories, or vice versa, transaction is going to be called interstate and IGST leviable. Second transaction, supply of goods in the course of import into the territory of India till they cross the custom frontier of India. Very simple. Supply of goods in the course of import, when we are importing, till they crosses custom frontier of India. So what transaction coming to your mind? High seas sale. What is a high seas sale? You know, when my goods are on high seas and goods are being sold before it crosses custom frontier of India. This is called as interstate, no denial. But whether IGST leviable, I would like to recall and would like to say to all the participants here, there are three specific transactions I'm going to discuss today. And these transactions was having subjective view and debate was on, but recent amendment done in IGST Amendment Act 2018, there are three transactions, and these three transactions are categorically placed in Schedule 3 item. And Schedule 3 says a supply is neither a supply of goods nor supply of services. As I started with the high sea sale, high sea sale is now the part of Schedule 3. It is being done through CGST Amendment Act 2018. So when it is part of Schedule 3, GST not leviable. Second transaction, third country export, meaning thereby, let's say I'm in India and I got some order from my customer in US. Now I need to supply goods to my customer in US. I got supplier in China who is supplying these goods directly from China to US. So goods are not coming to the Indian territory. It's directly going from China to US. Question comes, with a GST leviable, though this transaction revenue from customer would be coming to my PL account on credit side, but with a GST leviable. Now these transactions are being specified in Schedule 3 of CGST Act, meaning thereby it is neither a supply of goods nor supply of services. And third transaction, inbound sell. What happened in inbound sell? Let's say I'm an importer. I'm importing goods, let's say at $100. When goods comes, I warehouse the goods in custom bonded warehouse. Now I'm selling these goods at $150 before releasing the goods for the home consumption. So I've sold these imported goods, warehoused in custom bonded warehouse to B, let's assume. Now B is going to file bill of entry for the home consumption. So what happened? Pertaining to my transaction, which I imported at $100, sold at $150 with a GST leviable? Answer is no, because this transaction is again included in Schedule 3 of CGST Act. So these three transactions, high sea sell, inbound sell, and third country transaction, which is not entering into the territory of India, are the part of Schedule 3, meaning thereby it is neither a supply of goods nor supply of services. Well said. But as per Section 7, high sea sale can be considered as interstate supply but no GST leviable. Next question immediately coming to my mind, and I would like to ask you, revenue would be coming either on account of high sea sale or inbound sale or third country transaction, as I referred from China to US, in my PL account credit side, on which GST is not leviable. Now this is being done with recent CGST Amendment Act 2018. Question comes, what happened for common ITC, common input tax credit? So when my outward is not taxable, it has got some implication of what? If my outward is not taxable, can I say it is exempt supplies? Can I say that it's exempt supplies? If it is exempt supply, then replication of reversal of common ITC will come. Reversal of common ITC pertaining to exempt supplies. Having said that, I would like to clarify that these three transactions which are part of Schedule 3 now, GST not leviable but will not be considered, I again repeat, will not be considered exempt supplies. Hence, thereby, no reversal of common ITC would be required pertaining to these transactions. Now, only question left whether this provision will have only prospective implication or retrospective implication. To my mind, these are taxpayer-friendly measures. Now, these laws are clarificatory in nature. We all agree it is now being inserted in Schedule 3 by CGST Amendment Act 2018, but to my mind, when law is clarificatory, taxpayer-friendly measure, it should be applicable retrospectively from 1st July 2017. So what happened? There may be some taxpayer who may have reversed common ITC pertaining to these transactions. Can they claim refund of the same? Of course. Only they have to prove there is no unjust enrichment. If they are wrongly paid the taxes or reverse the ITC, they may very well go for refund of such taxes paid on these three specified transactions. Then comes supply of services. In the course of import into the territory of India, meaning thereby import of service, interstate supply, IGST leviable. Supply of goods or services, when supplier is located in India and place of supply is outside India, normally we understand export. Location of supplier in India, place of supply outside India, these are export transaction, export of goods, export of services. These are called interstate. With a GST leviable? No. It is zero rated. Section 16 of IGST Act. It can happen on payment of IGST, but you can go for refund of IGST paid, or you can go without payment of taxes. But in that case, you can go for refund of ITC, input tax credit, being exporter of goods and services. Coming to the next transaction, supply of goods and services to or by. So when you're supplying goods to FEZ unit or developer, it is interstate. with a GST leviable? No. Section 16 supplies to SEZ unit or developer are zero rated. But when supply of goods or services happening by SEZ unit or developer, so they are supplying to domestic taxpayer. It is interstate. GST leviable, answer is yes. If it is interstate, what is leviable? IGST leviable. So supplies to or by SEZ unit or developer is interstate supply. Coming to the last point, any supply of goods or services in the taxable territory, not being an intrastate sell, not being an intrastate supply, and not covered elsewhere in this section, then that would be implied is an interstate supply. So what is intrastate now? You have to go back to section 8 of IGST Act. Section 8 says location of supplier and place of supply within same state or union territory. This is called intrastate. What is leviable? CGST and SGST. In case of union territory, UTGST leviable. Now one point which I would like to highlight here, that location of supplier is a very important. We are discussing two important components for determining whether transaction is intrastate or interstate. Location of supplier and place of supply. Place of supply, we are going to have detailed discussion today. So what is the location of supplier? For location of supplier for services, definition is being provided, but you do not find what is the location for supplier of goods in GST law. It is not being defined, so it is left open for determining what is location of supplier of goods. Then we have to really go back to the definition of place of business for the supplier of goods. His place of business, warehouse, showroom, like that kind of parameter need to be looked into. Factory, that could be called location of supplier of goods. Having said that, now we have done intra and interstate. I'm moving to the next example. As I clearly said, and I would like to draw your attention. I said, and let's you assume this example, that I have treated one particular transaction as intrastate. So let's say I've taken an example of Delhi, and I've assumed that the location of supplier and place of supply both is in the state of Delhi. Then I would have charged CGST and Delhi SGST. But later on, for any region, and which I will discuss little later in my presentation, but let's assume place of supply in this given example is Maharashtra. Then transaction should have been interstate and IGST should have been charged. But what happened? I've charged CGST and SGST. Now question will come. Initially, on wrong analysis or interpretation, I've charged CGST and Delhi SGST, which should have been IGST. So question will come, can I, being supplier, adjust payment of IGST with already, which is wrongly charged and paid CGST and SGST? Answer is big no. In this case, if transaction turn out to be interstate, IGST should be paid to the government. So what happened? You have charged and paid CGST and SGST. You have to go for refund of CGST and SGST. Section 77 of CGST Act clearly says if any taxes wrongly paid, then you have to go for refund of the same. Now in this case, only one issue which would be cropping to your mind: if there's a period difference. Let's say you charge CGST and SGST in July 2018, but you come to know that you have wrongly charged, it should be interstate IGST in July 2019. So you have to pay IGST. Question comes, are you supposed to pay along with interest? No interest. Fortunately, no interest required, but IGST to be paid, and you have to go for refund of CGST and SGST. So it's very important for all of us together, either a taxpayer or tax consultant, to determine transaction correctly. As we normally understand that if you are wrongly charged, you have to go for refund, and we all know getting refund from the department, it's not easy task. So it's important to determine there and there itself whether transaction is a intrastate or interstate. I'm going to give a number of examples today, practical example, where we are going to test each other whether transaction is a intrastate or interstate. This particular slide only to draw importance in your mind that we should correctly determine supply either as a intrastate or interstate, so as we should not end up charging wrong taxes and then paying right taxes and go for refund of wrong taxes deposited. So refund itself is a tedious task, so it's better we should be proactive in determining the transaction intrastate or interstate. Having said that, next question which is coming to my mind, and I would like you people, all the audience who is watching this video, tell me why there is a need or principle for place of supply of goods or services. There are two persons. One is the tax department, another one is the taxpayer. For taxpayer, why this topic is important? Place of supply. For taxpayer, this topic is important to determine whether transaction is a intrastate or interstate. So it's correct GST is being discharged. Why it is important for tax department, government? Because we all know GST is a destination-based consumption tax. It will accrue to a destination state where ultimately goods and services are being consumed. So let's say I'm in Delhi and I'm supplying goods to my customer in the state of Haryana. Which state going to get GST component? Delhi? Because I'm supplying from Delhi, but my customer is located in Haryana, Gurgaon. Haryana will get SGST component because goods are destined and consumed in the state of Haryana. So what principle is coming out? Place of supply guide. Which state going to get the GST component, being GST is a destination-based consumption tax. Having said that, now next question which I would like to ask you, then what is the concept where we have to take registration? We have to take registration in the state of destination where goods and services are consumed, or we have to take registration in the origin state where from I'm supplying goods or supplying services. In an instant example, I'm supplying goods or services from Delhi, but it is going to Haryana. Haryana will get SGST component, but registration to be taken in the origin state. Section 22 clearly says we have to take registration in the state where from we are supplying goods or services. So registration is on origin based, but GST component will accrue to a state where ultimately it is going to be consumed. So this is the distinction. So next question again coming to my mind, since place of supply determining the state where goods or services are consumed, am I supposed to take registration in the consuming state? Answer is big no. Big no. We have to take registration in the origin basis, where from ultimately goods and services are being supplied. That is being stated in section 22 of CGST Act 2017. Having said that, now what are the points we are going to cover today? We are going to touch base section 10, which talks about place of supply for goods within India transaction. So it can be intrastate or interstate. Section 11, it is for export and import of goods. So place of supply for export and import of goods. Section 12, place of supply for services within India. Section 12, either intra or inter for services. Section 13, export and import of services. Services pertaining export and import, we have to determine place of supply, and section 14 talks about online information database access retrieval service provided to registered recipient or to non-registered recipient. What is the implication? In the hands of supplier located in non-taxable territory for supply of online information database access retrieval service. Having said that, start with the first go, section 10 of IGST Act for place of supply for goods within India transaction. Section 10 is applicable. Let's look at section 10, subsection 1, clause A. And what is this clause A referred to? We have to determine place of supply when supply involves movement of goods. So I request all the viewers, kindly read the provision first. Then we will analyze the provision with practical case study. Place of supply when supply involves movement of goods. Clause A says, when supply involves movement of goods, means goods are moving from one place to another place, whether by supplier or by recipient, and these terms are important. Whether by supplier or by recipient or by any other person, then place of supply of such goods shall be the location of goods at the time at which the movement of goods terminate for delivery to the recipient. So ultimate destination where movement is being terminated. So in a given example, if supply happening from Delhi to Maharashtra, then place of supply would be where delivery terminates, which is Maharashtra. So location of supplier Delhi and delivery is terminating in the state of Maharashtra, transaction would be interstate and IGST to be levied. Go further and then we will do some practical case study, analyze the provision in detail part. 10(1)(b). And this 10(1)(b) determines place of supply when goods are delivered on direction of a third person, meaning thereby bill to ship to model. In transit sell. So there are three parties involved. So when three parties involved, at the instruction of B, intermediary, goods are being delivered to the customer by supplier. So in this case, when three parties involved, A, let's assume supplier, B, assume intermediary, whose instruction are being given to the supplier for supply of goods to ultimate customer C. Now there are three parties involved. We have to determine there are how many supply. We all know two supply, A to B and B to C. But we have to determine place of supply, A to B and B to C, which is called bill to ship to model or in transit sell. Let's read the provision first, then we will do the case study. What provision says? Where goods are delivered by the supplier to a recipient or any other person, to a recipient or any other person on direction of a third person, whether acting as an agent or otherwise, before or during movement of goods, before or during movement of goods, either by way of transfer of document of title to the goods or otherwise, it shall deemed that say third person, means intermediary, has received the goods and the place of supply for such goods shall be the principal place of business of such person, means intermediary, third person. Having read the provision, now we have to move. What is the case study? How we can understand this transaction? Let's look at this practical case study. Let's say supplier is in Delhi and this supplier is being asked by intermediary located in Maharashtra, and this intermediary asking supplier to deliver the goods to customer located in Haryana. So A is a supplier, assume. B is intermediary in Maharashtra, and let's assume customer is a C. So first you tell me A to B, whether transaction would be intra or inter. Location of supplier, Delhi, no doubt, nothing. Place of supply in terms of 10(1)(b is a place of business of that third person, intermediary, which is Maharashtra, meaning thereby transaction is a interstate. So supplier going to charge IGST. What this recipient, third person in Maharashtra, for him it is deemed receipt of goods when goods are ultimately received by customer in Haryana. So it is called bill to B, ship to C in Haryana. When C received the goods, it's a deemed receipt of goods in the hands of B, and B can avail credit. Credit of what? IGST charged by a supplier. What B will do? Then B will raise the invoice to C. So whether transaction would be intra or inter, transaction will always be interstate supply. Location of supplier, Maharashtra, that intermediary, third person, and place of supply where delivery terminates, Haryana. IGST should have been charged. So what happened? The IGST credit taken by B in Maharashtra, he will use this credit for discharging the IGST liability on outward supply. And look at the beauty of this transaction. I said GST is a destination-based consumption tax. Which state going to get GST component on the concept and principle of destination-based consumption tax? Of course, Haryana in our case. Haryana supposed to get. So what happened? A charge IGST to B. IGST gone to Maharashtra, but Maharashtra will not be able to hold back this IGST because subsequently B to C transaction is again charged IGST on outward supply. So this IGST has again traveled to Haryana. So what happened? SGST component of IGST ultimate accrues to the state of Haryana on destination based consumption tax. So this is what bill to SIP2 model. And when we look at the pre-GST era, we got E1, E2 cell concept. And why this concept was there? Only to done away the CST component on subsequent transaction when goods are in transit. In GST, such concept gone. Now, when we look at bill to SIP2 or in transit cell, that is going to be governed by 10(1)(b as explained to all of you. Coming to now 10(1)(c). Place of supply, when supply does not involve movement of goods. So there is no involvement of movement of goods, and we have to determine place of supply. So let's read the provision, then I will say in what cases this provision going to be applicable. So 10(1)(c) says the supply does not involve movement of goods, whether by supplier or by recipient, but there is no any other person, which we have read in 10(1)(a). It is only whether by supplier or by recipient. Place of supply shall be location of such goods at the time of delivery to the recipient. Location of such goods at the time of delivery. So what all cases can come and covered in this 10(1)(c), where supply does not involve movement of goods? Let's start with, there are certain goods are placed at the disposal of recipient or physically not capable of being moved, machine embedded to the earth, or supplied in assembled or installed form. Let's take an example so clarity will come. If I'm a supplier, I got my building, and within this building I got certain furniture and fixtures. Now when I'm letting out this building along with furniture and fixtures to my recipient, then these furniture and fixtures does not involve movement of goods. Does not involve movement of goods. So what happened? 10(1)(c) will come into the picture, and place of supply would be location of goods when these are made available to the recipient. This is what the context for determining place of supply, where supply does not involve movement of goods. Now we have to do certain case study, important case study, and I want each one of you who is watching this video, they must apply their mind and try to find out the answers. What answer is coming to their mind is going to play important role. So I'm going to create number of subjectivity in this example for you to answer it whether transaction is a intrastate or interstate. Let's look at this example. Let's say location of supplier is in Delhi, and there's a customer who is placed at Maharashtra. He's coming all the way from Maharashtra and purchasing the goods at X works transaction. X works, I'm telling you, X works. Meaning thereby, supplier will hand over the goods to the recipient or customer at his factory gate. Now, it's at disposal of recipient wherever he want to take, he can take these goods for his convenience. My only question to all of you is, please tell me whether this transaction would be intrastate or interstate. Keeping in mind same fundamental location of supplier and place of supply within same state, intrastate, in different state, interstate. Please apply your mind. Intra or inter. And let me add further. Let's say it is FOR destination. And FOR destination means supplier undertake delivery of goods from Delhi to Maharashtra at customer premises. So please tell me, I've given two examples. Let me solve the FOR destination first so that you will get a clarity. FOR destination, quite clear to all of us together, that my goods are moving from Delhi and going to Maharashtra, and supply is being undertaken by the supplier. So what is 10(1)(a)? Just to recall, where supply involves movement of goods, of course goods are moving either by supplier, yes, by supplier. Then place of supply would be where delivery terminates, which is Maharashtra. Transaction would be interstate. IGST should have been charged. Now I'm back to my question in case of X works, where goods are handed over at factory gate to the customer by supplier. Now it is at disposal of recipient. He can take these goods to Maharashtra or some other place. Tell me, transaction would be intrastate or interstate. I know this point is debated a lot. Since July 1, 2017, we all are discussing and we are debating also. To my mind, this transaction would be interstate supply. IGST should have been charged. And why IGST should have been charged? I need to justify. What is the justification? I'm going to give you some of the legal logic which will prove that this transaction is an interstate supply. Logic number 1. 10(1)(a), same provision. I say where supply involves movement of goods, of course involve movement of goods, either by supplier, it is not the case of supplier, or by recipient, of course case of recipient. Recipient going to deploy his transporter to pick the goods from Delhi to Maharashtra. Then 10(1)(a) says place of supply would be where delivery terminates. So delivery is terminating in Maharashtra, transaction would be interstate. First logic. Second logic. If you assume for any region it's an intrastate supply, then it is go contrary with the e-Bay bill provision. We all know e-Bay bill provision rule 138 is the principal provision. What rule 138 says? Where any registered person, either consignor or consignee, who is causing the movement of goods. So in case of X works, who is causing movement of goods? Recipient. He is undertaking, he is deploying his transporter to take goods from Delhi to Maharashtra. shall generate the eBay bill with consignment value is more than 50,000 rupees. Perfect. So if you assume this transaction is an intrastate, but you're generating eBay bill from Delhi to Maharashtra, go contrary. Even though recipient causing movement generating eBay bill from Delhi to Maharashtra ultimately turn out to be interstate. Second argument. Third argument. Why it is interstate? Third argument. This Maharashtra fellow is a registered one, we all know. And this credit mechanism is applicable when transaction is a B2B. In case of B2C, no problem. And it is being stated in case of B2C, you can take your own call, but it is very important down the line in GST. Even in case of B2C, we have to correctly determine where the goods are destined. We are living in NCR. NCR region surrounded by Gurgaon, Delhi. If Gurgaon fellow coming to Delhi shop purchasing goods and taking back to Gurgaon, can you say it is an intrastate? Can you say the SGST component will accrue to a state of Delhi, whereas goods and services are consumed in the state of Haryana? Haryana should get SGST component. But nevertheless, we are discussing B2B. Let's pay attention. Then this recipient customer must have given his GST number. GST number. So what happened when given GST number? His GST number is having Maharashtra state code. And you all know when supplier is supposed to raise invoice, tax invoice in GST, there are certain particulars need to be filled in that tax invoice. And you may follow different format of tax invoice generated. It may be horizontal, it may be vertical, but those particulars must be there in that tax invoice. Out of those particulars, two particulars are important here for our discussion. Supplier must mention place of supply with state code in the case of interstate trade or commerce. So when Maharashtra fellow registered, giving his GST number, in what context this supplier will assume is an intrastate? Impliedly, he must mention Maharashtra as a state code and interstate supply. IGST should have been charged. If he assumed, supplier assumed is an intrastate, then he has to mention local address for delivery. So what happened is the responsibility of both supplier and recipient in B2B transaction to ensure that they are properly communicating where the goods are being destined, so that correctly place of supply with state code are being mentioned on the tax invoice, so as supplier charge IGST, of which credit flows to the recipient GST number and credit would be available. If by mistake he has mentioned address for delivery is Delhi, then supplier could have charged CGST and SGST, and of which credit will not go to customer in Maharashtra, though he has taken these goods to Maharashtra, B2B. So it's a co-responsibility of supplier and recipient. Coming to the last conclusion point, I've given you three bases, broad basis to explain the transaction. What happened if you do such mistake and you have done these mistake, then there's a scope available in the return. You can correct such transaction, and those tables are being prescribed in GSTR1. You can correct those transactions. So I have given a basis of 10(1)(a), how to apply it, but there are certain schools and they say no, in case of X works it would be intrastate, but I'm only saying that movement of goods, which are the important terms, only start when goods are being given to the transporter, goods are being loaded on a truck, and then movement start. movement cannot be contemplated started within the factory premises, from your stockyard to the factory gate. It can't be a case. It will only start from the factory gate to ultimate destination. That would be my view in this particular transaction. So IGST should have been charged whether ex-works or FOR on the basis, as I have discussed. I have taken eBay bill for the discussion as well. Now let's move to bill to SIP to model and different case study. I want you to get involved in this particular slide and please play important role. Decide the transaction. I will connect eBay bill also, and so that we can check whether we are correctly understanding place of supply provision with eBay bill provision. Let's say supplier is located in Delhi. Ultimate customer C is also located in Delhi. But intermediary, the third person which we are referring to, is in the state of Maharashtra. So what happened? B, intermediary asking supplier A to deliver the goods to a customer in Delhi. Now in this case you have to determine A to B transaction would be intra or inter, then B to C intra or inter, and then I will connect with the eBay bill so that you can really completely analyze this provision for chargeability and the generation of eBay bill. Now tell me, in this case, A to B is intra or inter? The first question. It is going to be interstate, no doubt exists, because location of supplier in Delhi, place of supply would be place of business of B in Maharashtra. Interstate, IGST should have been charged. The goods are not moving, not going out from the state of Delhi. Now what happened? B to C, location of supplier B is in Maharashtra, but place of supply the delivery terminates, which is again Delhi, IGST, interstate, and the same beauty of SGST component of IGST accruing to the state of Delhi by this model, bill to SIP to model. Now who will generate eBay bill in this transaction? Please, A, supplier, or B, intermediary, or C, customer in Delhi. Whether we need to generate 2 eBay bill or 1 eBay bill. We all know, and I'm giving you the answer to all of you, my dear friend, only 1 eBay bill is required. Only 1 eBay bill. Just 1 eBay bill. But who need to generate? It is supplier or intermediary. If you are saying supplier need to generate, then supplier will include the particulars for eBay bill of his own invoice. Let's assume supplier raising invoice for 100 rupees. But B is making markup 20 rupees profit while invoicing to customer C. Now if eBay bill generated by A with 100 rupees value and his address is being mentioned and goods reach to the customer C directly, then C customer will come to know who is a supplier. Why? Then he will buy from B at 120 rupees. He will not buy. So in this case, we can always do business modeling. We can change the scenario. There's nothing like B can't generate the eBay bill. He can generate eBay bill. And then B will consider his invoice of 120 rupees raised to customer C. Then what happened? Customer will not come to know where from he has purchased, at what price he has purchased. So what happened? Underlying invoice of B supported for generation of eBay bill by B, and B will mention place where from goods starting, maybe some place in Delhi, Mayur Bihar, and going to Chandni Chowk within the state of Delhi. So place of origin to place of destination shown within Delhi but underlying invoice of B would be there at 120 rupees, and customer will not come to know who is his supplier. Then these kind of transactions continue to be survived, because these are the business model is just as on date as a dynamic business model. So with one eBay bill generated, this bill to ship to transaction can be executed and safeguard that customer will not come to know who is the supplier, at what price he has supplied the goods to the intermediary or third person. Hope you got my point. Well said. Now moving to the 10(1)(d). 10(1)(d) is important to determine place of supply when goods are assembled or installed at site. Goods are assembled or installed at site. We have to determine only place of supply. So what is the place of supply? 10(1)(d) says, read, where goods are assembled or installed at site, the place of supply shall be the place of such installation or assembling is being done. Very simple, explained by way of practical case study. Let's look at this practical case study. Let's say location of supplier is in Delhi. Now he is supplying particular component. In a given example, kindly see, to a customer is in Maharashtra, let's say Pune. So these components are being supplied to the state of Maharashtra, where it need to be installed in or assembled. So what happened? These components supply with installation, and these are being done at Pune within the state of Maharashtra. So what would be place of supply? Place of supply would be Pune in the state of Maharashtra, and transaction would be interstate. IGST should have been charged, but I got certain question for you. Is supply with installation or assembly? Tell me that to supply of component going with installation and assembly, price is merged. Let's assume price is merged together under single price. Is it going to be works contract, or is it going to be composite supply and composite supply of goods or services? First resolve whether it's a works contract. Answer is big no. Reason is very simple. Works contract in GST is always in relation to immovable property. Gone. Second, is it composite supply? Of course, yes. Two or more taxable supply naturally bundle in conjunction with each other, then it can be composite supply. Then is a composite supply of what? Supply of goods or supply of services. Principal supply in this case is supply of components. There is a supply of goods. So what happened? It would be taxable as a composite supply of goods. So let's say goods component 28% GST rate leviable. Let's assume. And supply of installation or assembly, which is a service, 18% leviable. A whole combo considers a supply of goods 28% leviable, because supply of goods is a principal supply. Hope clear to all of you. But what happens if price are bifurcated? Supply of component, there is a specific figure, let's say 10,000, and supply of assembly, let's say 2,000 separate. Can we charge separate GST rate as applicable on component 28% and 18% on assembly? Possible. Of course possible. No denial. Of course can be done. But in that case, we have to determine place of supply for the component separately, and assembly services or installation services would be then place of supply for services. So we have to determine two place of supply for components and for assembly services. So this transaction can change and have reshape reshuffle. So such kind of business modeling can be done looking at best tax efficient manner. So hope you got this place of supply when goods are assembled and installed at site 10.1d. Coming to now 10.1e, and here it says place of supply when goods are supplied on a board or conveyance. So we are discussing a place of supply for goods when such goods are being supplied on a board, a conveyance. Let's read the provision, then I will connect with a practical case study. 10.1e says when goods are supplied on board a conveyance, including a vessel, an aircraft, a train, or a motor vehicle, the place of supply shall be the location at which such goods are taken on board. So just keep it in your mind, and I will discuss with one instant practical case study. But what happened when there is a transportation of passengers? Passengers are being taken for passenger transportation services. What is the place of supply? We have to go back to section 12, subsection 9, and it clearly says place of supply for passenger transportation services is if it is to a registered person B2B, then location of recipient would be the place of supply. If it is B2C, means registered supplier is supplying these services to unregistered person, to consumer, then place of supply would be the place where passenger embarks on the conveyance for a continuous journey. So keeping both parameters in your mind, let's do this practical case study for detailed analysis. Let's look at. Now there's the Indian Railway in Delhi, assume registered. They are giving transportation services to the customers, passengers. Let's say they are giving railway transportation of passenger services. So Rajdhani starting from New Delhi going to Calcutta. So when Rajdhani is undertaking transportation passenger services, then 12 subsection 9 of IGST Act going to be applicable. So what happened when Rajdhani undertake transportation passenger services with food? Like we all know, when we go for these kind of services, we get snacks, we get dinner, we get morning breakfast. So these have been given free of cost. So what happened? These snacks given free of cost is a part of my transportation passenger service. Composite supply. Composite supply of what? Goods or services? Of course services. Transportation passenger services. So what happened? What would be place of supply? So if it is B2B, then location of recipient. If it is B2C, then the place where from you embark. You can take an example. Let's say a consumer who is a registered consumer. So I will not say consumer, registered customer from Haryana, Gurgaon, undertaking transportation, undertaking this services from New Delhi to Calcutta, but they are registered in Gurgaon in the state of Haryana. So though this Rajdhani is starting from New Delhi, please tell me place of supply in case of B2B would be what? New Delhi or Haryana? If it is New Delhi, then intrastate. If it is Haryana, it's interstate. It is always in case of B2B location of recipient, interstate, IGST should have been charged. If it is B2C, let's say same customer unregistered and undertaking these services, taking these services from Indian Railway, then the place where from it is embarked, which is New Delhi, intrastate. So transportation of passenger services, passenger transportation services explained. Now what happened when goods are being taken on board, goods are being supplied on board a conveyance. So same Indian Railway undertaking passenger transportation services. But for that, certain goods are being supplied, say in a midway. So vendor is located somewhere in Allahabad, in the state of UP, and they are supplying these goods on board a conveyance to Indian Railway at Allahabad in UP. So what happened? I have to go back in the shoes of that vendor who is supplying goods on board a conveyance. So for that, what is the provision says? Place where such goods are being loaded on a board a conveyance. So it is Allahabad. So what happened? That vendor located at Allahabad, registered in Allahabad, loading, supplying the goods on board at Allahabad. So for this vendor, transaction would be intrastate, CGST and UPSGST applicable. So having said that, they will charge CGST and UPSGST, though invoicing is being done to a customer Indian Railway at Delhi location, but IGST not being charged. CGST and SGST is being charged, and of which if Indian Railway not registered in UP, they will not be given any credit. So this transaction is very, very important to determine intra and inter and corresponding credit available or not available. So I've explained this particular passenger transportation services with when goods are being supplied on board or a conveyance. Coming to the last subsection of section 10, which is residuary case, 10 subsection 2. It says where the place of supply of goods cannot be determined. Place of supply shall be determined in such manner as may be prescribed. So this is residuary section. Government is having power to issue notification for residue cases where place of supply cannot be determined. So we are through with section 10, place of supply for goods either intra or inter. So my dear friends, now move to supply, principle of place of supply for services, domestic transaction. Section 12 of IGST Act 2017 going to be important. So within India, it can be intrastate or interstate. Having said that, one important point which we must keep it to our mind: location of supplier of service and location of recipient of service. As you could see within the definition as provided in the slide, under section 2 subsection 15 of IGST Act 2017, location of supplier of service means a place where registration is being taken, or a fixed establishment which is characterized by sufficient degree of permanency of human or technical resources, or establishment most directly concerned, or usual place of residence. This is the order we have to see to identify location of supplier of service or location of recipient of service. So keeping all these parameters in mind, we are now moving towards identifying place of supply for services. So we are starting by default rule as given under section 12 subsection 2 of IGST Act 2017. And what default rule says, if transaction is a B2B, then place of supply would be location of recipient. If transaction is a B2C, as I say, B2C means from registered supplier to unregistered recipient, then place of supply continue to be location of recipient if address of recipient exists in the books of supplier, otherwise location of supplier. And these provisions aptly applicable for all chartered accountant. We all chartered accountant are falling into default rule. And to explain this transaction, let's assume a chartered accountant registered in Delhi, giving opinion services to a client located in Mumbai, Maharashtra. So what happened? This transaction would be intrastate or interstate. Before I conclude, let's say this client is coming all the way to the premises of supplier and taking verbal opinion, not the written opinion. So he's coming from Mumbai to Delhi and taking verbal opinion in the premises of supplier of service. Tell me transaction would be intrastate or interstate. As default rule has said under section 12 subsection 2, if transaction is B2B, registered supplier to registered recipient, then place of supply will always be location of recipient, meaning thereby this transaction would be interstate. IGST should have been charged. Having said that, let me create one good example and discuss GST methodology overall in terms of identifying place of supply, corresponding credit, and whether the cross supply of services or not. Let's assume I'm a chartered accountant. I'm registered in Delhi. I got my client also registered in Delhi. Their head office is in Delhi. Now this client wanted me to undertake stock audit for 4 different locations, maybe Mumbai, Chennai, Bangalore, or Calcutta. Assume 4 different places in 4 different states. Now, in this case, Bimal Jain registered in Delhi has to undertake this assignment. And we have to understand this scenario keeping in mind erstwhile service tax regime. In erstwhile service tax regime, we need not require to have separate registration. We can have only centralized registration provided centralized accounting or invoicing is being done from that particular place. But in GST regime, the concept is if I'm supplying goods or services from a particular state, then in that state we have to take registration. Now keeping all these provision in mind, I got an assignment for undertaking stock audit in 4 different states. I have 2 options to undertake this particular assignment. Either I can form a team of 4 persons from my Delhi office only. They will go to the 4 different locations of my client, undertake stock audit, come back in Delhi office, compile the report and send the report to a client head office because privity of contract with supplier and recipient is in Delhi. So I have undertaken stock audit at 4 different locations of my client, but privity of contract was with client registered and located in Delhi. First question, I'm a supplier. I've gone to 4 different states, undertaken stock audit. Am I supposed to take registration in 4 different states? Answer is big no, because I'm undertaking these services from a particular state, Delhi, so I will continue to be registered in Delhi. Now I'm going to raise the invoice. So when I'm raising invoice, am I supposed to raise full invoice for the stock audit undertaken at 4 different places in 4 different states? So what happened? I'm going to raise the invoice to my client, and I got this assignment from my client, and client is registered and located in Delhi. Whether this transaction would be intra or inter. As I said, in case of B2B, transaction would be, and place of supply in this case would be location of recipient. So what happened? I'm going to charge CGST and Delhi SGST for whole to a client. From this client, I got this particular assignment. So CGST and Delhi SGST charge. Now this credit question comes to my mind, and which I'm posting to all of you, can be availed by this client at Delhi registration, or he has to do something different. In this case, credit would be available to my client, no denial, but they can't use this credit because this particular service is pertaining to a place in different state. So what happened? This client has to take ISD registration and distribute credit to the location where these services are being pertaining to. So ISD credit, and ultimately these credit are being distributed, which also shows that credit GST component has gone to a state where ultimately services are being given, rendered and consumed. One scenario. Second scenario, let's say instead of sending 4% team from my Delhi location to 4 different locations, I'm asking my branches in that respective state to undertake the stock audit on my behalf, HO, head office in Delhi. So all 4 branches of my firm undertaking stock audit of 4 different locations of client in 4 different states, and after that they're submitting report to HO in Delhi. I'm again compiling the report, raising the invoice as intrastate. Question comes, the branches who has undertaken the work on my behalf, HO in Delhi, are they providing supply of service to my Delhi head office? Answer is yes, and that would be called supply of service. My 4 branches for undertaking this assignment, and they will charge GST as a normal supplier of service, of which, being HO, I will take credit and utilize for raising my invoice to my client. Client continue to avail credit but as ISD and distribute this credit to 4 distinct locations where ultimately these services are being consumed. This is the whole concept which I have explained in terms of default rule. So we have to keep this provision in our mind, and this kind of business methodology will evolve in time to come, and we have to really check whether these kind of compliances are being done while undertaking GST on the concept of destination-based consumption tax. Having said that, now we are moving to the next rule under section 12 subsection 3, which is pertaining to immovable property. So any services related to immovable property, place of supply would be the location at which immovable property is located or intended to be located. So I will explain by case study also, but let's read the further down below provision, and then we can do one complete case study for overall understanding. Where property, boat or vessel located in more than one state or union territory, proportionate allocation among a state and union territory as per the contract or on such other basis as may be prescribed. So there would be proportionate allocation amongst the state where such property is located. Third, where location of immovable property, boat or vessel is located or intended to be located outside India, then place of supply would be location of recipient. So keeping all these parameters, quick recall, in case of immovable property, place of supply would be location of immovable property. If these services are being provided and for a property located amongst different states, more than one state or union territories, then there would be proper allocation amongst such state or union territory. Where property intended to be located outside India, then place of supply would be location of recipient. Having said that, let's do this case study and analyze the provision. Let's say architect is providing designing services to a client located in Delhi. So both are in Delhi and both are registered, assume. But this architect service is provided pertaining to a property located in Maharashtra, Mumbai. Tell me, transaction would be intrastate or interstate. Having read the provision, place of supply in this case would be location of immovable property irrespective of fact. Billing is being raised B2B to a client registered located in Delhi, but transaction would be interstate. IGST should have been charged. Thoroughly done. Let's assume this property, next example, is not in Mumbai but in Dubai. But this property belonged to a recipient registered in Delhi with a GST leviable because this property is located outside India. For that, proviso clearly says if property located or intended to be located outside India but belonging to a owner registered and located in India, then location of recipient. So what happened in this case? GST leviable, whether as a intrastate or interstate, transaction would be intrastate because location of recipient would be place of supply. CGST and Delhi SGST applicable, even though it is related to a property located or intended to be located at Dubai. First part. Second part, below. Let's say builder is undertaking or a contractor is undertaking construction of road, and this road is passing through 6 different states including Delhi, and this contract is being received by a client located and registered in Delhi. Now when I'm giving these services pertaining to immovable property, provision says it is location of immovable property. So transaction need to be identified. There should be proportionate allocation for the services rendered in respective state. For that, we have to identify an agreement to what extent of area constructed in a particular state. To that extent, that will determine intra or inter. So let's assume location of supplier Delhi. There's no doubt about it. But to the extent of work undertaken in Delhi, to that extent it would be intrastate. Otherwise, for all other state, it would be interstate transaction. IGST should have been charged. So there should be proper allocation amongst the state and union territories wherein these services are being rendered. Having said that, one important point, the myth of GST as a one nation, one tax. I'm creating one example and telling you that GST required different mode of business modeling, and we have to really understand, because GST, though we are saying one nation, one tax, but still there are certain open areas where credit is not available. Let's take an example. I'm a chartered accountant. My client is also in Delhi. We both are in Delhi. My client wanted me to undertake personal hearing of a particular case coming in tribunal at Mumbai. So I have gone from Delhi to Mumbai and stayed in a Le Méridien Hotel, Mumbai. Now this Le Méridien Hotel going to raise invoice to Bimal Jain, being chartered accountant, registered in Delhi. Tell me transaction would be intrastate or interstate. So Le Méridien Hotel going to invoice to Bimal Jain, location of supplier Le Méridien Hotel, Maharashtra, Mumbai. Place of supply would be location of immovable property, which is again Maharashtra, Mumbai. He is going to invoice me, though B2B, but still transaction would be CGST and Maharashtra SGST. Whether I will get credit in my daily registration? Answer is big no. No credit. Neither a credit of CGST nor credit of Maharashtra SGST. In this case, what is the problem? This credit become cascading of taxes. How we can overcome this problem? Unless I'm registered in Maharashtra as ISD, Input Service Distributor, then avail credit and distribute this credit to my daily registration because pertaining to my daily utilization. So these kind of business modeling we have to do in GST scenario to avoid cascading of taxes and to make GST realistically one nation, one tax. Having said, let's move to next provision of place of supply, which is applicable for performance-based services under section 12, subsection 4. And this performance-based services are categorically mentioned like restaurant and catering services, personal grooming, fitness, beauty treatment, health services including cosmetic and plastic surgery. Let's take an example so that we can understand. Let's say I'm registered in Delhi. I'm going to a restaurant in Gurgaon. And in restaurant, I'm taking my client along. And I'm offering dinner or lunch, whatever the case may be. Now this restaurant is located in Gurgaon in the state of Haryana. I'm also registered in Delhi. So please tell me, with this restaurant providing services to me, which is B2B transaction, whether it would be intrastate or interstate. Transaction would be intrastate. Location of supplier Gurgaon and place of supply would be where this restaurant is located. CGST and Haryana SGST applicable. What happened? Can I avail credit? I can't avail credit. Otherwise 17(5) of CGST Act 2017 has got block credit concept as well. But per se, transaction is chargeable as an intrastate, of which I cannot avail credit in my daily registration had credit been allowed. Otherwise, it is falling under 17(5). This is what for the concept clarity. Now, having said that, I'm also finding that certain performance-based services are not covered under section 12, subsection 4 of IGST Act, like installation services, repair of goods, repair through remote access, not explicitly covered in section 12, subsection 4 of IGST Act 2017. So what happened? These are all performance-based, but not covered specifically. So what happened? It is going to fall under default rule. So these are the open lacunas still in the law itself. So we have to be careful enough while determining place of supply when we are looking at performance-based services. Having said that, I am also comparing these performance-based services with pre-POP rules 2012, place of provision of services. And you must be knowing that in rule 4 of erstwhile POP rules, place of actual performance is going to be called place of supply, location where services are actually performed. But such kind of provision does not exist when you look at existing rule in GST, which is on performance-based services. Having said that, one example is being created for you, which you can see that a patient coming from Maharashtra for getting plastic surgery done in a hospital located in Delhi is a performance-based. Since this plastic surgery for beautification not falling under healthcare services, we have to identify whether transaction is an intrastate or interstate. In this example, as I said, location of supplier, which is hospital in Delhi, and place of supply would be whether these services are being given, which is again Delhi, though it is for a customer or patient coming all the way from Maharashtra. Transaction would be intrastate, CGST and SGST leviable. Having said that, now we are moving to other training and performance appraisal services, which is falling under section 12, subsection 5 of IGST Act. And I'm also making comparison with erstwhile POP rules 2012. But what is place of supply for training and performance appraisal service in GST? When we look at section 12, subsection 5, It says if transaction is a B2B, registered supplier to registered recipient, then place of supply will be location of recipient. If it is B2C, so registered supplier is giving to unregistered recipient, then place of supply would be location where the services are actually performed. Location where the services are actually performed. So if we look at this example, it will clarify that what is POS, place of supply for training and performance appraisal service. Let's say a client registered in Maharashtra, approaching to a chartered accountant registered in Delhi for GST training. So what happened? The client team is coming all the way from Maharashtra to a place, venue located in Delhi and undertaking this training services. Now question comes, what is the place of supply with the intra or inter? While determining this, we have to really pay attention. If it is B2B transaction from chartered accountant to a client, then though training undertaken in Delhi, but location of recipient would be the place of supply, which is interstate IGST. If client is unregistered, then transaction would be intrastate CGST and Delhi SGST applicable. So having said that, now I'm creating another example for determination. Place of supply for training and performance appraisal service. And in this case, this chartered accountant is giving classes of GST to a various professional with a satellite classes. So these customers are being scattered different part of the country, and these classes are being given through a satellite mode. Now question comes whether this transaction would be intrastate or interstate. Through a satellite classes means the supplier is stationed at Delhi and sitting at Delhi, he is giving this training to all the students through satellite classes, whether intrastate or interstate. So these students are not registered per se, they are unregistered. Then what happened? Location where these services are being given, that would be place of supply. So place where services are performed is Delhi. In this case, transaction would be intrastate and chargeable to CGST and SGST. Now let's move to section 12, subsection 6 and subsection 7. This is for event-based services. Event-based services. We have to identify place of supply. So 12.6 talks about admission to the event. 12 subsection 7 talks about organization of such event. So admission to cultural, artistic, sporting, scientific, educational, entertainment event. And organization which is falling under 12.7, calling organization of cultural, artistic, sporting, scientific, educational or entertainment event, including services which is ancillary there too as well. So we have to identify place of supply. So for 12.6, where admission to provision says place of supply would be where the event is actually held or where the park or such other place is located for admission to. For organization of such event, 12 subsection 7 applicable. Then place of supply says if it is B2B, then location of recipient is the place of supply, and B2C, place where such event is actually held. That is what the broad definition and provision pertaining to place of supply. Having understood both the provision as given under section 12 subsection 6 and subsection 7, let's determine place of supply for admission to the event. Let's say a particular chamber of professional, and let's assume PhD Chamber of Commerce, located in Delhi, registered in Delhi. They're organizing one GST event, let's say in Mumbai. They're organizing. So for organizing this event, they would be inviting admission to the event also. Admission to the event. So for admission to the event, you would be getting different professionals across India. Let's assume some Delhi participants is now participating in this GST workshop or seminar organized or happening at Mumbai. Question comes for participation fees, which is admission to the event. What would be the place of supply? So place of supply for admission to event, as stated, place where event is actually held. Maybe those participants are registered in Delhi but traveling all the way to Mumbai for participation of this particular event, and transaction would be interstate, even though billing is being done to a client registered in Delhi. It is admission to the event. Place of supply, Maharashtra, interstate. What happened? I'm creating one example for you. What happened? For organizing this event, you are hiring some third-party supplier, vendor for organization of this event. So this third-party vendor or supplier giving organization services of this event to a chamber registered in Delhi. What would be place of supply? Section 12, subsection 7 says if it is B2B, then location of recipient would be the place of supply, though event is happening in Maharashtra. So what happened? Supplier registered in Maharashtra giving services of organization of this event to PhD Chamber of Commerce registered in Delhi. B2B transaction. Transaction would be interstate, even though this event is being done in Maharashtra. If it is B2C, then it would be intrastate. CGST and SGST leviable. Having said that, I'm now moving to section 12, subsection 8, which talks about place of supply for goods transportation services. And while discussing, you are finding that we are making comparison also with erstwhile POP rules 2012. What it is being said for place of supply for goods transportation services? If it is B2B, then location of recipient would be the place of supply. If it is B2C, so B2B, location of recipient. If it is B2C, then place of supply would be where the goods are handed over for delivery. Place, the goods are handed over for delivery. So let's assume I'm a GTA transporter. I'm registered in Delhi. My client is also registered in Delhi. We both are registered. My client wants to pick up goods from some place in Haryana, let's say Gurgaon, and delivered at Mumbai. Delivered at Mumbai. From Gurgaon to Mumbai. Tell me, what would be the place of supply? Whether intrastate or interstate. I said if it is B2B, location of recipient, transaction would be intrastate. If reverse charge applicable, apply the same provision, but would be intrastate. If it is unregistered B2C, then place with where it is being handed over for delivery. So place was Gurgaon where it was handed over for delivery. So transaction would be interstate. IGST should have been charged and paid, being interstate supply. So this is for goods transportation services. Going further, section 12, subsection 9, passenger transportation services. I have done this particular passenger transportation services while discussing place of supply when goods are being loaded on board a conveyance. So I'm skipping this particular slide and moving further. For place of supply, additional services on board a conveyance. Sometimes value-added services are being given on board a conveyance with payment basis. Sometimes you're watching video, sometimes we are doing telephone, sometimes we are taking additional services on paid basis on board a conveyance. Section 12, subsection 10. It says in that case, place of supply would be location of first scheduled point of departure. Location of first scheduled point of departure of that conveyance for the journey. That would be the place of supply. So for an example, if you want to see that you are starting your journey from New Delhi to Calcutta on a Rajdhani, assume, and you're taking a services of video game on paid basis, on board basis. Now, this video game service you're procuring when you're passing through the state of UP, let's say Allahabad. So what would be place of supply? Place of supply would be where from you embark, first scheduled point of departure, which is New Delhi, and transaction would be intrastate. CGST and SGST should have been charged in this transaction. Going further, for place of supply for telecommunication services. In telecommunication services, there are lot many fixed landline services provided to postpaid services, prepaid services. There are a number of parameters in telecommunication services, and diversity exists when we look at telecommunication. So while looking at telecommunication services as specified under section 12 subsection 11 of IGST Act, let's look at first, then I will explain one after another. If services is being given by way of fixed telecommunication line, then what happened? What would be the place of supply? Place of supply would be the location where such fixed landline are being installed for receipt of services. Let's take an example. I'm taking from Airtel, registered in Gurgaon, for fixed landline to be installed at my residence in Delhi. Tell me, intrastate or interstate? Location of supplier Airtel, Gurgaon, Haryana. Place of supply where such fixed landline is being installed, which is Delhi, interstate. That is how we have to identify. What happened in case of postpaid mobile connection? Then place of supply would be location of billing address of the recipient on record of the supplier. So what happened if I've taken postpaid mobile connection and my billing location is Delhi, and I'm traveling throughout the country, even I'm traveling international also. So when I'm receiving these telecommunication services, I'm receiving pan-India, even across the world. But for billing purpose, whether transaction would be intra or inter, transaction would be interstate. In the instant example, Airtel, registered in Gurgaon, Haryana, location of supplier. Place of supply would be billing address. Location of billing address of recipient, which is Delhi. Interstate should be leviable. That is what mentioned with one provision. You have to keep it to your mind, where address of the recipient as per the records of supplier is not available, then place of supply would be location of supplier of service. Now what happened in case of prepaid mobile? In that case, place of supply would be address of the selling agent. In any other case, what happened? Place of supply would be location where such prepayment is received or such vouchers are being sold. So these provisions need to be read with the second proviso, which says prepaid service availed or recharged made through internet banking or other electronic mode, which is quite obvious as on date. It happened through e-mode only. Then place of supply would be location of recipient on record of the supplier. So this is how we have to determine place of supply for telecommunication services as provided under section 12 subsection 11 of IGST Act. Now moving to other cases in telecommunication, place of supply would be address of the recipient as per the record of the supplier. If it is not available, then location of supplier. In case of lease circuit installed in more than one state or union territory and a consolidated amount is being charged, then there should be proportionate allocation to be done amongst the state and union territory as per the contract or on such other basis as may be prescribed. Now we are determining place of supply for other specific services like banking and other financial services, including stockbroking services under section 12, subsection 12. Then it says it's a location of recipient is a place of supply. And where this location of recipient is not available, then location of supplier. Section 12, subsection 13 talks about insurance services, and for that place of supply would be location of recipient if transaction is a B2B. Registered supplier to registered recipient. What happened in case of B2C for insurance services? Location of recipient of service on record of the supplier of service. That is how place of supply to be determined when we are looking at insurance services. Coming to the last component of place of supply for domestic services, and section 12 subsection 14 talks about advertisement services to the central government, state government, statutory body or a local authority meant for identifiable state or union territories. In that case, place of supply would be taken as located in each of such state or union territories, meaning thereby if it is falling in more than one state or union territory, then it must be proportionate allocation amongst the state and union territories as per the contract or on such other basis as may be prescribed. So we are through with the place of supply for services within India under section 12 of IGST Act, which may at most would be intrastate or interstate depending on the same thumb rule, location of supplier and place of supply within same state, intrastate, location of supplier and place of supply is in different state, interstate supply. Now we are moving to place of supply of services for export and import. Now we are moving to place of supply for services, import and export of services. But before we move, I would like to take all of you for place of supply for export and import of goods at first place. Section 11 going to play important role. So whenever I say place of supply while discussing export of goods, then place of supply would be a location outside India. Section 11, subsection B of IGST Act. When you talk about import of goods, place of supply would be location of importer. So to explain this transaction, let's take an example. I'm an importer, I'm registered in Haryana, Gurgaon. I'm importing goods through Navasiva, Maharashtra. So my goods are coming from Maharashtra, Navasiva. So tell me, what would be the place of supply? Is it going to be Maharashtra because goods are being cleared at Nhava Sheva custom port and then taken from Nhava Sheva to Gurgaon, it will always be location of importer, which is Gurgaon in the instant case. So which state will get SGST component of IGST if ultimately these goods are being consumed? Haryana, though the goods are being imported from Nhava Sheva, Maharashtra. First. Second question, do we require to take registration in Maharashtra for getting these goods cleared at Nhava Sheva? No need. There is no registration required. I can mention my GST number of Haryana and get the goods cleared and pay IGST and compensation cess if leviable. Now, once I pay IGST and compensation cess, it will be available as a credit to me in my GST number of Haryana, provided I am using such goods for further outward taxable supplies. Let me do quick 2-3 case studies. Quick, fast one. The first one. If I import cleared at Nhava Sheva and selling these goods to customer only in Maharashtra, so I'm not taking these goods to Gurgaon and then resending back to my customer in Mumbai. Cleared at Nhava Sheva, I want to send back invoice to my customer directly at Mumbai. Can I do that? Can I do that? Tell me. And if I do that, whether transaction would be intrastate or interstate, I need not require to have any registration. I continue to invoice from Haryana and transaction would be, in this case, interstate, location of supplier Haryana and place of supply where delivery terminates, which is Maharashtra, interstate. If I want to send these goods directly to my job worker at Calcutta, after import, I want to send directly to my job worker at Calcutta. Can I do that? Of course, possible, I can do that. Do I require to take registration at Maharashtra? No way. So what happened? I will import and directly send from Mumbai, Nhava Sheva to Calcutta on delivery challan, which is going to be issued from my registration, Haryana, Gurgaon registration perspective. So this is what some of the example I have drawn and explained to all of you for determining transactions intra and inter, and then subsequent how it can taken up, corresponding registration provision and the credit provision as such. So having said import and export of goods as stated in section 11, now moving to section 13 for import and export of services. Before I start, I would like to give some input. What all provision you should keep it to your mind for determining place of supply for services while in the case of import and export of services. My first humble request to all of you would be that for determining place of supply in the course of export and import, you must keep it to your mind POP rules 2012. Place of provision of services rule 2012. And you must be knowing, I'm sure about it, that rule 3 was the default rule. See this table. I'm explaining to all of you that 4 column is being created. The last column talks about place of supply of service for export and import. When you compare this place of supply under section 13 for export and import, it is more or less same as per the POP rules 2012. Default rule 3 you must be recalling. If it is B2B, location of recipient. If it is B2C, location of recipient if address exists in the books of supplier, otherwise location of supplier. Same provision. Go to performance base, rule 4. Rule 4, so place of actual performance is going to be place of supply. When you go to immovable property related, which is under section 13 subsection 4, second row of the instant example, location of immovable property, Rule 5 of erstwhile POP Rules 2012. Going to section 13, subsection 5, which is service by way of admission or organization, event-based services, place where event is actually held. Erstwhile Rule 6, same provision is being picked up for import and export of services under section 13, subsection 5. When you talk about performance base, then the location in taxable territory as referred to, and when you give Rule 4, Rule 5, Rule 6, performance based, immovable property and event based, and you should be knowing highest of all three services, then which is the highest portion? That's what the point and provision. So what is being stated under section 13, subsection 7, for performance based, immovable property related and event related services supplied in more than one state and union territories, place of supply would be each of the state or union territory in proportionate value allocable to such each state or union territory, where it is being given for banking or intermediary services. Erstwhile Rule 9 of POP Rules 2012 is a location of supplier of service. This is what, and just I can do one quick case study because we have to complete this video within a time frame of 1 hour 30 minutes. Since time is really running by, I will do one quick study on intermediary services. Location of supplier of service, going contrary. Let me take this example and close. Let's say I'm a particular intermediary located in India. Foreign supplier, let's say located in Korea, wanted me registered in Delhi to identify customer in India. So I'm identifying customer in India for my foreign supplier. Foreign supplier is going to pay me a consideration which may be at a percentage of turnover. So once I've identified customer, this foreign supplier is going to supply goods to the customer directly in India. And on the basis of turnover, I'm being paid a commission, percentage commission. So I would be raising invoice to my foreign supplier, whether that would be export of service. As per this provision, it is not export of service because location of supplier Delhi, Bimal Jain, and place of supply would be location of supplier. It is not export. GST leviable, even though I'm getting convertible foreign exchange for the country in India. And these provisions are copy-paste as got changed from 1st October 2014. We have seen erstwhile POP Rules 2012. What happened in contrary example? Let's say I'm an Indian supplier asking my foreign commission agent to identify customer base in foreign country, let's say Korea. He has identified the customer for me. I've supplied, Indian supplier supplied the goods to a customer outside India. Then he's raising invoice. This foreign commission agent raising invoice to Indian supplier for his services with a GST leviable under reverse charge as an import of service in the hands of Indian supplier. No, it is not, because location of supplier commission agent outside India and place of supply again location of supplier outside India, no reverse charge, no GST leviable, whereas my foreign exchange is going out of the country. So these provision of GST going contrary with the economic policies of India need to be corrected. I've just highlighted this one. There may be lot many repercussions when we look at other services. Going to transportation of goods, place of supply while discussing import and export would be place of destination of goods. And here, other than mail or courier service. Going to passenger transportation, place of embarkation for continuous journey, and when additional value-added services are being given on board a conveyance, place of first schedule point of departure of that conveyance for continuous journey would be the place of supply. So these are the broad provision pertaining to place of supply for import and export of. Now let's look at online information database access retrieval service, which has been given under section 13 subsection 12, but importantly, which I would like to highlight here, section 14, which is referring to online information database access retrieval service. What is this? And you must know that as on date we are into E mode. Lot many information database access retrieval services available through online mode. So what happens if supplier is located outside India, providing online information database access retrieval service to a customer in India? If customer is registered, no problem. Reverse charge, import of services, no problem. Problem lies only when these are being given to unregistered customer in India. So supplier is located outside India, providing online information database access retrieval service, and recipient who is not registered in India. So what happened in this case? Who will pay GST? Because customer is unregistered. In this case, a special provision is being made under section 14, and this talks about that such supplier located in non-taxable territory has to take single registration under simplified registration scheme, which is notified by the government. Any person located in taxable territory representing such supplier of online information database access retrieval service shall get registered and pay IGST on behalf of the supplier. If such supplier does not have physical presence or does not have representative for any purpose in the taxable territory, he may appoint a person in the taxable territory for the purpose of paying IGST, and such person shall be liable for payment of tax. So I'm through with place of supply provision, extensively discussed for within India, intrastate or interstate, import and export, either for goods or services. We have also discussed the importance of place of supply for determining for taxpayer and the government, and what is the relevance coming out. We have done the different case study, number of case study, practical case study at the appropriate time wherever we have discussed the relevant provision. So I'm through with my presentation, and I'm sure you all must get benefited with this deliberation of place of supply. In case you are having any doubt pertaining to place of supply for goods and services, we invite your suggestion and questionnaires. And thanking each one of you once again for watching this particular video and making GST in realistic terms good and simple for all of us together. Thanks for watching. Thank you very much.